when it comes to support and resistance, it's pretty simple. I mean, all we're looking for is you just want to find a clear line where the stock has either resistance, it's spiked up into a level and it's stopped it and pushed it down, or support, it's bounced off a level or it's based on something. And you don't want to try and, it shouldn't be hard to find these things. Like when you're looking for support and resistance, you got to think the more people that are seeing the same level as you, the more it's going to make sense, the more it's going to work, the more it's potentially going to hold. So if you're sitting there and you're kind of like, looking at something, you're like, maybe the line's here, I could probably maybe get a line in there, it kind of works. That's probably not a line you want to use, because you need, hundreds, thousands of other people to be using the same line as you if it's going to work. So if you can look at a chart and immediately just say, oh yeah, that's clear as day, that's a good line to play off. So that's something that I learned. So on this one, for example, here, again, this is pre-market. We have a bit of volume coming in pre-market. It's a gap up. This is a low float stock. So you can use these levels. Pre-market and after hours are definitely in play for the type of stuff that I want to use. And again, like everything that we're going to go through here, you can use on the daily chart. Like if this was Apple on the daily chart, it's all the exact same stuff. It's just a longer time frame. So what I would do, I don't play day ones usually for shorting, just because I don't, these big squeezes and stuff here and there. It's a lot more risky, and I have a lot more success on day two. So what I would do first is basically just work your way from left to right and just start drawing in any lines that you see. So, first one I see right here is kind of this, 560s area, 563 maybe. The reason I see that is, 4 a.m. we got the first big push. And then if I zoom in on it here, first big push, and then we pulled back, bounced kind of right off this 560 area, shot up again, and then it came right back down, bounced off the 560 area again, and then it kind of, just kind of did its thing after that. So this first big push, you can see the volume here. Like the volume here is much higher than it was for the whole rest of this next hour or so. So this is important. If you're seeing a big volume bar into one of these levels, that becomes more viable because a lot of people are using that level. And then, we just kind of work our way through. So, okay, we have our first, this would be a support line, right? Because the stock's over top of it. Next thing you want to do is kind of look for tops, right? Resistance levels. And you guys can draw these in wherever you want. You can play them however you want. The biggest thing is just to know where they are and be aware of them. Because if you're playing the long side, you want all your resistance levels in because you want to know where you're going to want to sell into. If you're playing the short side, you want to know where you're going to short into and then also cover into, right? So, line to line is really the kind of terminology that I like to use. Is just everything in between is just noise. Just play off the lines. If you're going to short at a line, pick the line. Don't short in the middle, because in the middle, it's just all noise. It's garbage. The next line here that I would see personally is right around this 650 area. We had these two little wicks up to like 675, but it didn't really push up to there very hard. And then over here again, checking volume once more, you can see this is a bigger green candle right here. So this one, it had a tall wick. So when I see a big top wick like that or a bottom wick, it just indicates a lot of pressure on the side of the wick. So to explain that a little bit more, if I see a big top wick, it means what happened is this stock shot up and there was a ton of selling pressure that just hammered it back down really fast. Exact same thing on the bottom side. If you see a big bottom wick, that means there's a ton of buying pressure. So for me, if I see something like that, not in this case because I don't trade pre-market, but if this was near something that I was going to play, that to me is a really good indicator that, this is where I might want to get short because there's a lot of selling pressure on top of that. So I would use that, the 650 area, 650 is a line right there. Whole and half dollar marks are always, kind of key levels. Everybody thinks, I'm going to sell it when it gets to $10. I'm going to sell it when it gets to $11. I'm going to sell it when it gets to $11.50. Nobody really, for the most part, is like, yeah, I'm going to sell it when it gets to, $11.23, $11.27. Like, like people don't really think like that. So yes, down here we have a line at 563. But every time I play around these personally, I always like range it a little bit. So if you're going to dip buy it, it's probably a good idea to maybe put an order up here at, say, if you're trying to dip buy off this 563 line, maybe throw a buy order 1/3 size, 575, one right on the line, one a little bit below, kind of spread them out over that line because it will wick through, it'll wick down and it'll wick up a little bit. It's never going to hit dead on that line perfect every time. So, it's good to leave a little bit of breathing room. That was a big change actually playing these over NASDAQs. I always joke with David about that because I always say, when I first started trading, it was when OTCs were still really hot. And it only took me 3 months to learn how to become profitable in OTCs. It took me another 3 years to learn how to become profitable in NASDAQs when the OTCs died out. And that's a big reason right there, is because in OTC markets, it is going to hit right on that 650 line to the dot. Like they're so much more tight to their numbers. It's really, really easy to read those ones. But they don't really come around too often anymore, so I just don't even worry about them. Hope I'm not going too fast. Let me know if it sounds like I'm going too fast.
Yeah, in the comments.
Mm-hmm.
I want to point out though, like, it happened to me when I first started too. When I started drawing support and resistance lines, they're pretty obvious to find after you find them for a while. But like when I first started though, I always thought like if that's support, I thought that was support. It's not going to break that line. Like, no, it could break. Like,
yeah, for sure. Yeah, the key is like the biggest thing to remember is just look for the really, really clear lines. Like, I've shown some of my friends who are like just starting to get into stocks. I show them this stuff and they can see it right away. Like, oh yeah, no, that makes sense. And I'll ask them like, where do you think the line is here? And they'll point it out to me. So, it's pretty easy to see once you've looked at a couple charts. And those are the ones you want to use anyways. You don't want to try and, draw like in between here. If we zoom in again, like, I could draw a line here at 630 on this top and say, okay, it kind of hit here, it kind of hit there. I could maybe draw a line at, 585 because it's sort of bottomed out here. But like, if you're doing that, nobody else is going to see those lines, right? Everybody's going to look at this and say, okay, well, it pushed up, it topped out here, and then it topped out again, and same on the bottom. It bottomed out, and then it bottomed out, and then it just kind of stayed in here. So just pick the ranges and then use the top and bottom of those ranges as your line. Because if you're playing in here, or you're trying to dip buy in the middle of this or short in the middle of this, there's probably not a lot of people that are doing that. Everybody else has probably got their orders up here and they're waiting, right? It's whatever's really clear to you is going to be clear to everybody else, and then it's going to make the line a lot more viable. Again, I'm just moving through the day here, so keep an eye on the time frame at the bottom. We're still pre-market, so 7 o'clock, 7:30, 8, 9:30. Obviously, when the market opens, you get this big candle. But we'll just, we'll go from up here. We'll look at the top. So okay, we had 650 was our previous high over the pre-market spike. And now what happens? We get this big push right through it. It kind of plays around it for a bit and then it takes right off again, rips up. So where's our next level? Could probably draw one right at the top here, right up at the top, 850. Again, $1.5 marks are always really, a lot of people play off those. And then we got another candle here. Again, look at the volume. We had really big volume coming up into the spike, kind of died off. And then we had another big volume on the red candle, and we got that big top wick. Again, showing that selling pressure. Next line, okay, we kind of bounce off this 775 area, comes down, bounces up into the 775 area, comes down again, bounces up, touches that exact same line again, 775. So to me, that kind of makes sense, right? Like, we got pretty good volume up here. It bounces off that after a big spike, falls below it, and then it comes up and hits it, fades to newer lows, and then it pushes right back up, hits that same level again. So to me, that makes sense. Like that's a line that I'd be interested in, 775, 76 right. So all this stuff. Sorry, yeah?
Sorry, I just wanted to say that's a really good example of, that old adage where it's like previous support will become resistance and previous resistance will become support once you break through it. So that one like broke through the support and it came back up to retest it, and like, yep, that support is now resistance, and it kept selling off from that point.
Yep. And the more times it hits a line, the more that line becomes viable. So, let's say in pre-market here, we have something like this, it comes up, bounces off this line, goes below it, hits it, drops down, hits it again, and then maybe it drops down a bit, and then it comes over it, and then it bounces off of it, and then it bounces off of it, and then it goes below it again. If it kind of really draws a really clean line like that, that's a line where once it gets on either side of that, if it's way above, that's a really good spot to dip buy. If it gets below, that's a really good spot to short. The more times a line's hit, the more clear it becomes to everybody, the more people are going to be watching it to put their orders on it. And if the stock's below it, a lot of people are going to be wanting to sell into it or short into it. If it's above it, a lot of people are going to want to be cover or buying. So you just got to think about what everybody else is thinking. It's one of the big things that a lot of people I don't really think about is, you want to try and know what the masses are doing, because that's what the stock's going to do. So, off here off the open, we get this little wick into the VWAP line, and then the stock just kind of tanks out of the open, right? But again, if we look, where did it kind of consolidate? If we go back to the open here, the pre-market, right up at 650, right? That was our, quarter after 4 a.m. That was the line we drew. And then we come over to market open, we get tank off the open, and then it kind of consolidates right on the 650 line. So like these lines do become important, everybody's looking at them. It's the simplest way to play charts. And then look, it comes down here, and then where do we bounce? Within, what's our low there? 563. So, literally to the penny, 563 on that line we drew. Bounces off of it, comes up to, 615, whatever it is here. So, this might be somewhere where you want to dip by, right? This is our low from pre-market, and then tanks off the open, bounces right off that low. So like, I don't play this. I don't play these moves personally. Like I said, I play day twos, but you can play these any way you want. The biggest thing is just whatever line you're going to play, just stick to it. Like have a plan, whatever your plan is. I mean, we've drawn 4 lines so far, so you can set up whatever kind of game plan you want on these lines, but whatever it is, just stick to it, right? Like, I mean, there's always a lot of chatter on Twitter, and I find it gets really messy if you're paying too much attention to it. I got lost in that too when I was learning. I'd be looking at stuff, I'm learning, and I'm just focusing on one pattern. Maybe it's something like this where I want to dip buy off of, the pre-market lows. And then, somebody says, oh, I'm going to dip buy it off $6, right? Because that's a good number. And then a couple other people say that, and I'm like, oh, well, maybe I should dip buy it off $6 then. And then I'll try and buy it here, and then it fades down, 40 cents. And then I'm like, shit, and take the position off because I'm underwater. And then, bounces right off the line that I thought it was going to. So, just whatever plan you make, just stick to it. Whatever risk you're going to have under this. If you are buying off 563 and maybe you're going to risk, it might come down to 550 because that's the $50 mark. Maybe you're going to risk, 542 or something, for example. Just stick to that. I mean, if somebody else says, my risk is 553, and then you're like, oh, well, they're only risking 10 cents. I'm risking 20. So I'll do that and I'll double my size. Well, what if it wicks down to 553 in a split second? You lose, and then it bounces up, 50 cents, right? So just stick to your plan. I mean, if you're beginning, like, it's going to take you a while to come up with a good plan. You might really not know where you should risk, but whatever it is, just stick to it. Because if you're in the middle of a play, somebody says something, and it's just gonna stress you out. I know it did to me, and it made me lose a lot of trades. It wasn't until I just ignored all that stuff. I don't even look at Twitter until the end of the day personally, because I'm usually trading stuff that other people are trading, and they usually have a different way of trading them than I do. So I don't need to pay attention to it.
No, that's a good point. I actually try to avoid Twitter for stuff that I want to trade because I don't want it to influence any of my thoughts. I want to reach my conclusions and everything independently.
Yeah, it becomes a lot less stressful too. You just block it all out, have your trades. Like, I'll look at it, like on the weekend or like, before market opens, just see what people are kind of talking about. But if I'm actually making a decision, I'm not listening to anybody. So we'll just keep kind of running through the day here slow, just so we can see how these lines that we drew before market open kind of play out, right? So, and you can draw more through the day. Like, maybe you want to put one here. We kind of perked up a little bit there, and then we bounced into it again. So like maybe this becomes a line, I'm not sure. 616, let's just draw it in there and see what happens. So here, like David said, I mean, it doesn't mean it can't go below the line. So you get one bounce, then it tanks through. That's a really important thing as well, is usually you only get one shot on these things. So if you're trying to dip buy off a line, do it the first time. If it comes down to it again, your odds are probably cut in half for if it's actually going to bounce again. So just take the first one. Same with the short. Here, if you're trying to short up into, I know I just drew this line, but let's say it was there. You're trying to short up into 616, short it once and then cover. If it comes back up into it again, you probably don't want to take that shot because that's, you're hitting it twice, it could break through. First shot's always your best shot. So here, we kind of get stuck under 563 for a little bit, keeps bouncing off of it, and then we break through again. That's basically a good example right there, what I was just saying. It comes up to it here, and then you can short this level, and then it hits it again, and then it comes through it, right? So your odds just kind of go down the more time it's hitting one level. This one here, so this 616 line that we drew isn't really viable based on this spike here. So 650 though, that was the one that we drew. Again, I think that was the pre-market highs. If we go back, so that was our pre-market highs right there, 650, or not our pre-market highs, sorry, just our first spike. 4 a.m. spike was 650, and then that's basically where we bounce up into. You know, our high was 645, so we're 5 cents from the top. And that, again, that's kind of what I was talking about with those wicks. So, you know, if you put an order out at, you know, 640, 650, 660, just around that line, and it comes up to here, you know, at least you get a third of your position on, right? And then it comes down, and I'm just going to take this line out of here. Say you get a starter position on here at 640, a third size, that's great, you know. Comes down, where does it bounce? Right off that same line, 560, 563, right? And then we come up again, and look at this, right? So we hit it once, hit the 650, bounce off the 563, and then what happens the second time we hit it? Blows through it, and it goes to the moon, right? That's why, again, always just take that first shot. Don't push your luck, because the more time it hits something, your chances are going to go down and down and down. This is actually one of my favorite long patterns while we have this here. It works really well. It works on low float stocks, like the lower the better, you know, 3 million, 2 million kind of. But what I look for is something like exactly like this. You know, we have a big spike in the morning, stock looks dead, right? You know, we're down here, it's below VWAP, it's been selling off. It was at 850 pre-market, it's just been tanking, big volume, you know, lots of selling. And then you get this little perk. See the volume down here. Again, guys, remember to keep an eye on the volume. All midday, really low, right? You know, you get these kind of little pushes. Every time you get a bit of a volume push, you're getting close to a line, right? Because why is that happening? Because people are looking at these lines. More people are trading close to that line, right? That's what you want to see. You want to see everybody playing on your line. And then we get over here, you know, volume comes up. Now we got even more volume. So we're up to, these are the 3-minute candles again. We have 1 million volume on the 3-minute candles, right? Back here, we only had 500,000. So we're getting more of a push up into this line. And then we sit right on top of the VWAP right there. That's where, you know, if this happens, you can go long real big. This is probably one of the best long setups that you can play. Really low float stock, ideally. I mean, if it's 1 million shares, buy more. You know, if it's 5 million share float, buy a little bit less kind of thing. The lower the float, the better. But if you have something like that where the stock is just dead all day long, and then, you know, in the afternoon, you get this little push and it sits over VWAP on higher volume. Remember that, it's very important. Just, you know, this is where I would just pile into it. And then you can see here, you know, you get this absolutely massive squeeze. You could buy in here at 650 and, you know, sell up into $10. Like, that's a huge move in, what is that, 1430, about an hour, right? So you make 80% in an hour. And then again, like, look at this, you know, we had our 776 and our 850 lines from pre-market, and look what happened. You know, we had a little bit of consolidation on that line, right? Why is that happening? Because people are trading right here. There's probably people selling into this line because they knew it was there. There's probably people shorting here because they think this is the top. All the people that shorted there, what happened on this big candle? They got blown out because it went up to the 850 line, right? And then again, as soon as we hit the 850 line, you have more volume again, and then it kind of comes down, right? So this just shows you that people are using those lines. That's really good. If you can see a little bit of consolidation or something around your lines, that means that you're picking the right lines. And this is something you guys can just play with, right? Exactly the way we're doing here. Just find a chart that moved, you know, close your eyes, whatever, scroll back to the beginning of what had happened, and just, you know, just drag the chart over candle by candle, draw your lines in, and then just see how the pattern played out and see if your lines actually lined up with things like this, with higher volume, with tops, with consolidation. And if you can do that on a, you know, you can do that on a weekend and just go through 100 charts, right? So it's not something that takes a long time to get used to. You can just, you know, rip through 1 million of these things. And if your lines are all in the right spot, you're seeing volume near your lines, you're seeing, you know, tops and bottoms and consolidation, then you know you're making the right decisions.